Hi, everybody. Welcome to another episode of What the FICC? What the FICC, man? I am Spencer Israel. This guy's Ian Cully. He's head of FICC at All Star Charts. Ian, how are we doing today?
Excellent. Friday afternoon. Ready for the weekend, Spencer. How about you?
Oh, man. Don't I know it? Don't I know it? But okay. So last time on Wednesday, we talked, but a variety of things. We had a bunch of questions. People were asking about emerging market bonds. They were asking about the crack spread in energy. And one of the things we sort of hit on, we hinted at, we didn't really talk about it too much, was a bunch of commodities going parabolic, shall we say. We talked about this as well on the morning show a couple of days ago. Don't look now, but there is some weird, not I shouldn't say weird, it's kind of normal in a way, but there's some wild moves happening in commodities land. So let's start with let's just go one at a time here. So I guess first off, Ian, before we even get too specific, wild moves in commodities, right? Why do they happen? Are they normal? What is the difference between crazy moves in commodities versus crazy moves in the stock market?
Well, I think you nailed it when you said, maybe not so weird, right?
Yeah.
Maybe normal and
right.
Parabolic moves in commodities. That's just how commodities tend to move. They are actually normal. But unlike stocks, I think the big difference between equities and commodities is, these parabolic moves ultimately come crashing back down. And we're starting to see some markets that are rolling over. But first, let's start with OJ, a market still in the midst of a big move. And this is quite a parabolic advance here off of the 2020 lows. And this is the first chart we have here. This is getting a lot of attention lately because it can't stop, won't stop. It just keeps going straight up. It's almost vertical at this point. Next slide is coffee. Now, coffee's not in the midst of a parabolic advance. I do like this chart. But I brought it along today, not because it's carving out a constructive potential double bottom, but to highlight the advance off of the 2020 lows, also parabolic.
Yes.
And just that it's common. This is what we tend to see in commodities. Big moves that absolutely rip. And especially after they break out from a period of consolidation. So if and when coffee is back above 200, it's called 198, I expected another similar kind of advance. Not there yet, but this is how commodities like to move.
Okay, so I'm glad you brought this chart. So from here we can I'm looking at the topping pattern, right? And sort of maybe something that can give us a hint and something that we can apply to OJ and the other markets that we're going to look at here. So here we have, a pretty obvious, it reached a fib level, frankly, right?
Mm-hmm.
And then failed there, and that was basically that. It never really got back to that level, and then once it fell through that other fib level. My font's a little small on my screen, so I can't quite see what number that is. But I guess we'll call it 200, 197, right? So once it fell through there, then you knew the pattern. Then you knew that was your signal the move was over, right?
Yes, absolutely. Yeah. Yes, that
right.
was the breakdown level right around 198, 197, and coffee sold off. And it reached the measured move from that topping pattern, put in a low, and has been basing since just below that key Fibonacci retracement level. That's this is a topping pattern, again, reaching its measured move. We got polarity 101 coming in, resistance from resistance turning into support, and then flipping and becoming resistance now. And we it's an excellent chart full of information and education here.
So can we go back to the OJ chart then for a second? Because I didn't look enough at that.
So this is just ripping right through this former resistance level. Now I brought another chart to kind of highlight a potential upside.
There we go.
Objective here around 438.
This is what I want to see. So what I want to know from you is, what is your signal that this move is over, that we are potentially heading into a sideways period?
I'd have to see a break of this parabolic trend line. That would be the first indication that OJ is running out of steam. Most likely we would see a new low in the 14 day RSI. This is a 14-week RSI here. This is a weekly chart. I would want to, it's a really high weekly RSI reading, up near 80. I think getting back below 70 on the weekly RSI would definitely highlight a potential pause, at least in this current leg higher. I think really highlight what the end of a parabolic advance looks like when we get to cattle futures, live and feeder cattle.
Okay, let's see.
So when we get to those later here in the slide deck, you'll see what I'm talking about in terms of a trend line violation and some sideways action, and then a breakdown, just like we saw here in coffee futures towards the end of last year.
And is this how it usually plays out? It's not usually like a elevator up, elevator down, right?
It's usually escalator up, elevator down is the adage.
Well, not but in commodities though, in commodities, isn't it like elevator up too?
Well, it can be, but it's more like, you see, it's more of like an escalator. Sometimes, here even in these parabolic advances, they take a little bit of time to get going, and then they really shoot higher right there at the end. That's what gives it that parabola there.
Okay, fine.
This here, the consolidation in coffee that was, it's almost a year plus in duration, is not that typical elevator down. That adage really applies more to grains. And I know we experienced some volatility in the grain markets earlier this year. But you can see here still, it's that trend line break really kicks off the sideways action preceding a potential breakdown here.
All right. So orange juice going parabolic, and I guess the trend is higher. The move, if you're going to trade this, is buying, right? Going along, on weakness until the trend line is broken, until it falls below a certain fib level. Really, it's up to you, but that's the move here.
Yeah, I mean, if you're not already long OJ futures, I don't have any technical strategies that to get in at this point. Okay. I mean, this trend is mature. It doesn't mean it can't continue to rip higher.
Yeah.
Maybe you get a pause up around 438, and you get a tight consolidation in the form of some sort of bull flag or bull pennant, and can trade that, an upside resolution there. But for now, it's tough. That's the thing with commodities. You really got to catch those breakouts, or have a really a well-defined strategy for buying the dip. Because once these things get going, as you can see, they rip, and hard to jump on a speeding train like this. right now,
Okay. All right.
I,
So what other markets do we have here though? Because so OJ, very mature trend. Okay, sugar. This one, in your view, is this as mature?
no, so we're coming off of, a multi-month consolidation here in sugar. Yeah. This was one of my favorite charts heading into the beginning of the year, and it was because of this tight consolidation here, this arc, this between 17 and 20. I just loved getting along this breakout, and it ripped. It absolutely ripped higher towards 26. And since then, it's been chopping sideways, carving out a nice consolidation. We zoom in here a little bit, you see that parabolic advance off the October lows last year. And a little bit of a flush, downside flush here. It's kind of, I don't know if it's called a failed breakdown, a little downside flush. And that really kicked off this move all the way up towards 26. Again, since, early spring, sugar's just been carving out. I mean, maybe you can call it an inverted head and shoulders pattern with an upward sloping neckline. I don't know. I don't care for these patterns with just sloping boundaries, because they're very hard to trade. But the market doesn't care what I like. It doesn't care how I would like to draw my lines. So this is how I see it. But I think the best way to trade sugar futures right now, because I think there's a trade here. You can either buy strength on a break above 27.88, or you can buy weakness back towards 26. And I know that's a really large range. It's a big range there. So I prefer to wait for a decisive break above 27.88 and ride that long up towards 31.50.
What's interesting though?
Yes.
What's interesting is as you know, I bought sugar a couple months back, on this breakout, and pay attention to the y-axis though. You know what I mean? Because like the chart looked good. It was breaking out, but it was moving like 10 cents a day, 15 cents a day, right?
Yeah.
And I was like, it was like watching paint dry for me,
Yeah.
So
that's the issue with some of the bond ETFs.
Yeah, no kidding.
And even like UNG, and so the other commodity ETFs where they're not big moves,
right?
So I like moving into the options market for some of those plays, and then picking up all that implied volatility when that implied volatility spikes when it starts to rip. But that's the thing. That's the thing with futures. Like the big gains come from actually trading the futures market, the commodity contracts themselves.
Yeah.
But still a great trade. I think it's got room to run. Up towards 31.50. It's a similar advance off of the July lows of this year that we got last year into off of last year's October lows into the spring peak. So makes a lot of sense. Similar move. Fibonacci extension level, nice consolidation. I think sugar's a good looking chart. Now what's funny is I've for the past month or so, my big trade that's I've been thinking about is long sugar, short cocoa.
Well,
Wanted to get short cocoa,
not so fast.
Not so fast. I know we've talked about cocoa. We highlighted the strong seasonality for cocoa in October. One of the worst months historically for cocoa futures. Cocoa futures breaking out above 37.75. This is a logical level to see some resistance, which it did. But then instead of rolling over, it found support and quickly reclaimed this big level here. So as long as cocoa is above 37.75, I think we could see a swift move higher up towards a 5 handle, which is that's a big level. I
Wait,
also like
wait,
looking at
question about that. What's the all-time high in cocoa? Do you know?
it's higher than it's 5,300. I want to say 5,300. So getting us back up towards 5 is, we're getting close to those July 1977 highs.
Oh yeah,
Yeah.
great. I remember it well.
Yes. And you got to think, you ask yourself, are we in a commodity super cycle? And when we're talking about cocoa revisiting levels not seen since the 1970s, I think the answer is probably yes.
So these are the types of things that happen in a commodity super cycle, which brings me to a question that I just occurred to me that I feel like I should have known. I should know this by now. I should have asked you by now, and I haven't. When was the last commodity super cycle again?
It was in the 2000s, I think.
Like 02 to 07, like that.
Yeah,
that
02. Well, I mean, I think a lot of commodities didn't peak until 2011. Precious metals didn't peak until 2011. A lot of the grains continued higher into 2011. So like 02 to 2011.
All right. Ian, why is your couch blocking your door? I've also wondered this, Macatech.
Okay. So I'm in the very back corner of an old house. This is an old house down in Pensacola, downtown Pensacola. House is probably 150 years old. So I'm in the back corner, and there are doors on every single wall except the one I'm facing, which is where all the natural light comes in.
Got it.
So I got a bathroom to my right. I have an exit to another office to my left, and behind me is the kitchen. So I had to put the couch somewhere. I have to have somewhere where I can sit down and think and get away from the screens.
Okay.
During the day.
Well, let's keep moving here. We got a couple more charts, and then we'll head out for the weekend. So cocoa going parabolic, maybe $5 in that, if it can hold this level, or not. Yeah, I guess if it can hold that 3,800 level, right?
Yeah, it's right. It's 3,850 right now. So maybe some resistance up here around 3,885. That's a key extension level. But hey, the price doesn't always respect these levels. If it rips through it, maybe we get a pull back towards 3,885. If so,
but the point is you're buying on weekdays. That's what you're doing. That's what
at this point, yes. If you haven't caught the breakout, I mean, it's already run. So if you weren't buying strength above 3,775, then I would wait until some sort of, again, short duration bullish continuation pattern, or a pullback towards 3,885, if and when it takes that level out.
All right, last one here. Let's move on to cattle. Again, making a big move higher. What's up with this?
So this is live cattle. Now, live cattle doesn't quite fit the bill in terms of a parabolic advance. This has just been a really strong advance.
It's pretty strong to me.
Yeah, it's a strong move, but it doesn't fit that parabola or a parabolic trend line. Yeah. Nevertheless, I wanted to share cattle futures and feeder cattle in just a moment. Broke up to new all-time highs earlier this year and has undercut that 185 level. This trends looking weak. It looks like it's turning lower here. I think we get short live cattle futures below 178 and take it back down towards 150. Looking at the December contract, it's finding support right now around 177 and a quarter. We got what I deem a potential breakaway gap on Monday, a gap lower, big down day to start the week. And now it's trading around 181, 180. So 182 now, 182.50. So to see a nice consolidation here above that 177 and a quarter level would be great for taking a short position. Give price some time to digest the recent sell-off and then continue lower. So if and when the December contract live cal breaks down below 177.25, like it's short, targeting 150. Now this is the parabolic advance. This is it, Spencer. We'll wrap it up with feeder cattle. Look at this. See this? Can you see how that fits that parabolic trend line?
Sure.
And what it is it, looking at live cattle, very similar into the 2020 low, but then it goes almost vertical, and that's what makes these advances parabolic. Also hitting all-time highs earlier this year, and also breaking back below a key level here. 246 is the level for feeder cattle. Now, I look at this and I'm thinking escalator up, elevator down. Now, on the daily chart, we got a multi-month head and shoulders topping formation. So we got an opportunity to get short feeder cattle. I wasn't on top of it. The break below 248 really, that was the signal. Now we're all the way down towards 235. Now, I would like to buy strength, or excuse me, I would like to sell strength back towards 248. I'd like to get short on a retest of this neckline, this breakdown level. If not, maybe you'll get a bearish continuation pattern, maybe in the form of a short duration flag or pennant. Initial objective down around 220. I think it's going to go all the way back to 200. I'm going to go all the way back to 200, maybe 190.
That's a ways away there. But like, what other logical price is there, right? Like, what other logical stopping point between the here and then? There really isn't one, right?
It may be like it's 220, 200, 190. I think those are the potential support levels up ahead for feeder cattle. But I think 200, 190 is not out of the question. Again, big moves like this often see large moves in the opposite direction.
Wow.
And this is the first oversold reading for feeder cattle since October 2020. Right. So that's another heads up that the market is transitioning out of a bullish regime or an uptrend and reversing lower.
All right, but and the good news here is if you trade this stuff, it would appear that there's more room to go on the downside. It's not like OJ where, like, you could buy it here, you probably missed a good chunk, if not most of that move. Feeder cattle, those highs are not all that far away, right? It seems there's a lot more room on the downside if you are going to short this thing.
Yes, absolutely.
Okay.
Absolutely.
Right. Okay. Cool. Was that it? Anything else?
That's it. That's it.
That's it
for today. I mean, copper's trying to dig in. I mean, if we want to talk about what's on my radar in terms of the commodity markets, I mean, the lack of participation among base and industrial metals has really stood out. So copper digging in and potentially catching higher would be nice. a really big deal for the overall market, especially commodities.
All right. That's a good place for us to stop here. It's Friday, so we'll stop a little early, and that's okay. We can do that because this is the internet. We do whatever we want on the internet. Thank you for the charts, Ian. Thank you to everyone watching. You can always email us with questions about anything related to commodities, bonds, interest rates, currencies, forex, oil, gold, silver, orange juice, whatever you're thinking about futures, bonds, or currencies. You can always email us at the email on the screen, questions@stockmarketmedia.com. And if you have suggestions for future topics on future shows, let us know. We will take that into consideration. And that's it, man. Ian, have a good weekend, sir.
You too. We'll see you next week.
See you guys.
Thanks for watching.
be all